All right, let's get to Apple. Apple topping first quarter estimates as strong sales of MacBooks and iPads overshadow weaker than expected iPhone sales. Still, Apple CEO Tim Cook calling it the company's, quote, best quarter ever. Joining us now, we have Gil Luria, his DA Davidson's managing director. Gil, you actually raised your price target on the stock, raising it to $290. That's up from $260. Let's talk about how the street is interpreting this, because very much the guidance seems to be enough to soothe some of the nerves out there. How are you looking at the results and ultimately what this signals here for Apple this year?
Yeah, so for Apple, what's really important is, are we going to have an iPhone upgrade cycle? And we got some good news in that regard. Overall, iPhone sales were down, but that was really because of the big drag from China. We could talk about that. But importantly, Apple is seeing early signs that Apple Intelligence is driving better sales. And we've only just started introducing Apple Intelligence functionality into the iPhone. The more functionality comes in, the better it is, the more integrated it is into our experience, the more people are going to encourage each other to upgrade their iPhone, which is the key to Apple. More iPhone sales, more wearable sales, more service sales. That's how we're going to get acceleration of revenue growth in Apple. And we got enough of that in the quarter that investors are more optimistic.
Do you think going forward here, especially for some of the core regions that Apple wants to lean further into, that they need to do something on the pricing front in order to make sure that they're actually bringing people on, especially in these early waves of not just the new iPhone features, but the operating system changes that they're making with a mindset for artificial intelligence?
Yeah, that's a very important point. The pricing strategy here has to be region by region. For instance, in China, they had promotions on iPhone. That's something we in the US would never see. You'd never walk into an Apple store and see a discount on iPhone. In China, they just did that. They cleared the inventory. That's why sales in China were down. By the way, that sets them up better for the rest of the year, even in China. In other regions, there's still a need for them to find a lower end strategy. Overall, they want to increase the average selling price, and that works in a lot of markets, but there are some markets where they need to start figuring out what the lowest price iPhone is to maximize their ability to penetrate these newer markets.
Gil, I'm curious your read on how the market has been reading Apple right now in relation to AI, because it actually got a pop this week from when many of its big tech peers were under pressure on the heels of the DeepSeek headlines that we got out here over the last week or so. What should Apple's AI initiatives look like? And now the involvement here of DeepSeek, what does that spell out for Apple?
So the reaction to Apple was spot on, right? Because the developments around AI getting orders of magnitude more efficient is exactly what Apple was playing for. Remember, Apple isn't building massive data centers like the other mega caps in order to build bigger and bigger models, which is now looking a little wasteful after we saw what is possible in AI. Apple was always focused on, we're going to wait for the models to get small enough that they can go on the handset in the Mac, and then we're going to be able to execute on an AI strategy that way without throwing tens or hundreds of billions of dollars into massive data centers. And they're being validated for that strategy because the models are now getting so small and so good that eventually most, if not all, of the AI we use will be on the handset, which is going to be far more efficient for them, especially since they have our information, they have our context, they have our calendar, they have our correspondence. So they're going to be able to deliver the AI to consumer, and they're really in the best position to do that.
Gil, we're looking at shares of Apple here pre-market. Looks like they're set to pop at the open by about 4%, but even with that 4% rise, they're really just going to be making up what they had essentially lost since the end of December here. So all these things considered, what is an investor to do with this name after an earnings report like this, with some of the perhaps larger themes that are at play with Apple?
We think that Apple is in a good position because short-term expectations are reasonable and long-term expectations is where we're focused on. Again, if we have an upgrade cycle in iPhone over the next couple of years, that's when Apple's stock outperforms. And yet nobody's expecting that to happen next quarter. And so Apple is set up well. It's trading at a higher multiple, but that always works when you have accelerating growth, which appears to be the case for Apple. Now, the excitement that we had at peak, the peak of the stock was when people were using the term super cycle. This was never a super cycle. It's an upgrade cycle. It's playing out gradually. And as it plays out, revenue is going to accelerate. The stock can outperform.
Gil, while we have you real quick, just going back to the comments that you made a moment ago in regards to China, and they're actually relatively upbeat just in terms of maybe what this signals here going forward. I want to pull up a chart, and this very much shows Apple's revenue coming from China, and obviously has been on a steady decline here. You can see that at the right-hand side of your screen. What does that then look like in terms of reaching a bottom? How should investors then be thinking about that?
China will continue to be Apple's toughest market, and gradually it'll become less and less of the business. I mean, it's already gone from being 20% of the business, about 15% of the business. It's more competitive. There's political pressure on Chinese to sell less iPhones and sell more of the domestic brands. The domestic brands are finely tuned to the local market. They're very powerful competitors, more powerful than Apple encounters anywhere else, really. So it'll continue to be a tough market. It'll continue to be a volatile market. But over time, it becomes a less and less important part of the story. And importantly, right now, after a quarter of clearing inventory from China, they're set up for it not to be as much of an issue for the balance of the year.
All right, Gil, thanks so much. We're going to be watching shares of Apple closely here at the open. Appreciate it.
Thank you.